Yo, what's going on, guys? We're actually doing some analysis on one of y'all's favorite monthly paying dividend stocks known as Realty Income. It's actually a REIT. It's known as ticker symbol O. And check out the stock price. It is not done good. And we're going to be doing a ton of analysis on this. We're going to be digging into their financials because check this out. They just reported earnings a couple of days ago. So we're going to be seeing how they did. And we're going to be seeing why is the stock price back down to the levels back here, back to the 2018 levels. And this is a monthly paying dividend stock. The current yield is 5.87%. So hey, that's a almost 6% dividend yield, and they pay monthly. So yeah, hope you'll join me today as we deep dive into Realty Income's numbers and see, is their dividend safe? Do they have room to raise it? Are they diluting you? So let's actually dig into it. So I like that they just reported earnings, so we're going to get to look at that. But real quick, I really would appreciate if you'd hit the like button for me. It really does help me out a lot. But let's get back into the analysis. So first off, their actual total revenue is up 24% from 1 year ago. Now their total revenue is up 24%, but we want to go to their net income, which is only up 6%. Now 6% is still good, don't get me wrong, but let's actually check out their balance sheet. And it's actually really healthy for a REIT. Their assets to liabilities ratio is slightly up from 1 year ago. It's 42.49%. That's what I actually like to look at, the ratio, because that tells you how much equity you actually own in the company. But anyway, we actually want to look here at the core FFO. Now look how much assets they grew from 1 year ago, 45 to 55. That's $10 billion of new assets. And those 10 billion of new assets, honestly, it only made them 8% more money. So check this out. Their core FFO is up 8.15%. That was slightly disappointing. That's why the stock price is down. Remember the stock price? So we actually want to see how much of this does their dividend cost them. Remember, $732 million. Now let's see how much their dividend cost. Their monthly paying dividend actually only cost them $553 million. So just from a number standpoint, their dividend is safe. If you're looking at this from a dividend stock, the dividend is safe, but there is a couple other things we have to look at that's not that good. We're going to be seeing how much interest rates are affecting them. So check this out. They have total debt of $20 billion, okay? Total debt of $20 billion and cash on hand of $344 million. Now, why did their cash go up like crazy in the two most recent quarters? Well, let's see what they did with their stock program. So they actually issued $873 million worth of shares. In the quarter before that, $2.18 billion. Now, that's a lot of shares. And if we go to their total common shares outstanding, we can see that it's actually true. It's up 15% year over year. But also keep in mind, they have $10 billion of new assets, but that costed them diluting you 15%. So you got to keep that in mind. So it's kind of like, yeah, I've been diluted, but also I have these new assets. All right, so we just looked at their financials. We've gotten a good idea of how they're doing. Yes, you've been diluted, but you have $10 billion of new assets. But I actually want to show you something. So if we look over here, we zoom in really close. You see this little S right here? This is a stock split. So what does that mean? That's actually when they spun off ticker symbol ONL. They spun off all their office properties. And that was actually very smart by Realty Income. Why? Because look, whenever that happened, the value of these assets were close to $1 billion worth of market cap. The market cap right now is $300 million. This was over $1 billion at one point. It was $22. Now it's $5. So it was smart on Realty Income's behalf to spin off these properties because look at the value of them. It's gone from $25 a share to $4 a share. So yeah. All right, so now we're going to go look at Realty Income's top tenants because they have this triple net lease strategy, which we'll talk about later. And they have a lot of top tenants, like their top tenants include Walgreens, Dollar General. So let's actually go check it out. I also wanted to do a quick update on the Realty Income data center investment. So check out this article right here. This is from like 20 hours ago. Realty Income invested approximately $200 million, securing an 80% equity interest in the venture with Digital Realty, as Digital Realty now only owns the other 20%. So the actual data centers, the construction started in the fourth quarter of 2022 and will deliver 16 megawatts of capacity. Now, I'm not too familiar with like what all this means. Expandable up to 48 megawatts, that's a huge increase. And the budget for the first phase is 400 million. This kind of sounds expensive, but I assume these projects are going to create a lot of returns. I'm going to see if we can find out what are the estimated returns of these investments because we know data centers over the next couple of years are going to do really good as the need for data and AI, GPUs, all that. Oh, okay, this is really good. So the facilities are already 100% leased, already pre-leased to an S&P 100 client. So someone in the S&P 100, maybe it's Microsoft, Amazon, who knows? and they are expected to generate 6.9% initial cash yield upon the lease in mid 2024. So that's actually what we wanted to look at. So we are actually getting some good returns on it, 6.9%. And I'm assuming with the triple net lease property, or actually they just own the whole property. This isn't even a triple net lease strategy because they're investing so much money into the whole facility. All right, so now we're going to go to the Realty Income investor presentation page. Here's their main website. I wanted to show you the dividend growth right here. Check this out: 140 consecutive monthly dividends declared and 104 quarterly increases of their dividends. So they should have done this in years. I don't know why. So they must not be a dividend aristocrat yet, because they probably would have put that on there. But anyway, let's go to their investor presentation because they always make those look really good. And where is it? All right, guys, I found it. Here's Realty Income's most recent investor presentation. You can pause and look at either of these slides that you want, or of course just go to their website. But I'm going to try and find you the slides that I think are the most important, like the one where it shows their top tenants. Can we find that really quick? Where is it? Look how many slides they got on here. If you're a Realty Income shareholder, you definitely got to go to their investor presentation, or for any stock that you own. They always make the presentations look really good. But anyway, I found it. Check this out. Client diversification, their number one tenant is Walgreens, Dollar General, and Family Dollar. Hey, then they got 7-Eleven. I like 7-Eleven. But I want to talk to you about the risks of possibly their top tenants, such as Walgreens, because we know Walgreens, there's nothing really special about them. We can all get our pharmacy items from literally anywhere online, Amazon. So the struggle of their fundamental business is at risk, and that's reflected in Walgreens stock price. They're bringing in roughly $100 billion a quarter, and their negative net income. Can you believe that? We'll show you that in a little bit, but I just wanted to show you their top tenants. Now, this is before any mergers, because I know they might be doing something with Spirit Realty, and they haven't done that yet, but this is right now their current top holdings. And almost all these are really safe. Like, check this out. Like, we all know a lot of these, like Walmart, that's very safe. Tractor Supply. But we actually want to see, are their most top tenants safe? Because that's 4% of the portfolio. So let's be real. So let's actually go check out Walgreens and Dollar General stock. Oh, and you guys also know Wynn Resorts. It looks like Wynn Resorts pays Realty Income. So it looks like Wynn Resorts doesn't own all their properties. Realty Income leases them to them. Yo, so what was I talking about? Walgreens being at risk, their top tenant. Well, let me tell you, would you want this stock as your number one top tenant? I'm about to show you the financials, but first, let me show you how the stock is done. Now, this is the daily chart. I have to switch over to the weekly chart because Walgreens hasn't been this low since we're about to find out. Look at this. You see this green line? This is where they are. It hasn't been this low since 2010. So Walgreens is at 2010 prices, but let's check out their total revenue. So look, $35 billion, okay? You think, wow, that's amazing. $35 billion a quarter. Sheesh, that's a ton of money. Well, then you look, it hasn't grown over the past 5 years. But also, if we go to their net income, yikes, look at this. They're $33 billion in negative net income. I mean, most quarters. I mean, they made $500 million that one quarter, but it's not that good. And if we go to their balance sheet, their assets to liabilities ratio went from 66 to 70, which is really bad. And if we go down here to their free cash flows, look at this. It was negative last quarter. In some quarters, it's just $86 million. So they made, like, on average a quarter, like 250 million. How much does their dividend cost? They literally can barely afford their dividend. I mean, like, it's rough. What's the yield for Walgreens? It's a 9% dividend yield. I think it's gonna have to get cut. I'm calling it here. Walgreens dividend cut. And let me show you the other stock that's their top tenant. Now, this one isn't that bad. This one actually has really good financials, in my opinion. So this one isn't at risk, but it almost is. Like, look at the stock, it's at, like, wow, I didn't even realize this. They're at the 2019 level prices, the early 2019 level prices. They were lower, but they finally bounced off that bottom. Oops. But they're still a dividend player right here. This one it was yielding 2%. Last time I looked at it, it was yielding over 2%. So they're yielding 1.89%, and they do a ton of stock buybacks. But anyway, hope you guys enjoyed the video. Don't forget to drop a like for me. It really does help me out a lot. Also, leave a comment down below with any questions or any of your thoughts. I'm going to respond to every single comment. Test me, try me, see if I don't do it. But anyway, hope you guys have a great rest of your day.